Hey, welcome back to Lunch at the Market. Only tomorrow stands between you and a 3-day Christmas holiday from the stock market. And a welcome day off it is at that. Nike is getting whacked today. It's down about $5.50, but the interesting thing is there's actually no trade. The January 80 puts are only 24 cents and the February 80 puts are only about 62, 63 cents. So there's really no reason to risk $5 in order to get 24 cents or even the 62, 63 cents, because the spread would have to be hanging out there for just longer than we like to do it. So unfortunately, despite the fact that Nike is down as much as it is, there really isn't a trade. You could get long the stock, but you're talking about a huge amount of capital in order to put on 100 shares. You're talking about, $8,600. So it's not a small price to pay, and the calls are really not that attractive. There's actually quite a bit of volatility still in the options on the call side, and so you're actually paying too much. So really, as far as attractive as it is, I think that there's no trade right now in Nike. So we'd say stay away. But another shoe name that there is a trade in, once again, is Deckers. Yesterday, we flagged the $85 level as your bogey to get into our short put spread trade. Anytime the stock breaks $85, you get paid better than $1 for the January 80.75 put spread to sell it in Deckers. So once again, right now, this second, you should be able to get, we'll pull it up, you should be able to get, probably $1.20, at least $1.15 for selling that spread. We like doing it. We actually added to our position in a material way this morning. Yesterday, the stock breached 85 and then traded back up to 87. We'll see if we have the same magic today, but once we get through these holidays, there's Christmas, New Year's. Once we get into January options expiration, let's see, we'll take a look at how many days that are left in that January option, and there are only 31 days left in that January option. So by the time we get to January the 1st, we're going to see 9 of those days be gone, and the calendar is going to start to get on our side. Of course, if you're wrong, you can always roll out or down and out. But we think that the Christmas season is going to be a good one. Deckers being a seller of shoes and being in a shoe bull market right now, we do like being short that 80.75 January put spread in Deckers for over $1. Okay, other things that we've done into the years, and we're lightening up on our positions. We've taken names off the table like Applied Materials, AMAT, Micron, MU, and ON Semiconductor Corporation, symbol ONNN. We've actually replaced these with in the money January 2013 calls. So on the ONN and the MU, you can actually get the January 2013 750 calls for around 2 something. Okay, one thing that we like doing is called a synthetic stock position, where you're actually long a call and short a put at the same strike price. So for instance, in Micron, we actually only paid 95 cents for that trade, and it means that we're both long and short at that $7.50 level. So as long as the stock stays where it's at or doesn't breach $7.50, then all of the premium in that put that we're short will be completely erased, and then obviously we'll get the gains on the upside. If the stock moves materially, either way, we'll take action. But at $7.50, we're actually pretty comfortable being long the stock anyway, and we were already long the stock. The idea of doing this synthetic stock is to make capital available to us should we see a sell-off. The markets don't go up in a straight line all the time, and we have not had a big down day, like a over 100 down day in the Dow in quite some time. With Micron trading at a PE of 4.42, at 750, we'd be just fine owning the stock there. So we like the synthetic stock where you are long a 7.5 call and short a 7.5 put against it. Okay, so consider those on ONN, AMAT, AMAT, and MU Micron. Okay, look, after big gains, it's really, really important that you raise some cash. The month of December has been absolutely monster for stocks, and we could see the next year be a very good year for stocks, but we will also see a period of selling. And whether it's sell in May and go away, or January tax selling, or whatever you're going to get, you're going to see some kind of selling between January 1st and May the 1st. So take advantage of the high prices and take some of your exposure off the table and raise some cash so that you can be prepared. All right, thanks again for tuning in again today. We always appreciate you guys checking us out on Lunch of the Market. We hope that you have a great day, and we will see you tomorrow on Christmas Eve. Well, it's almost Christmas Eve. It's the eve of Christmas Eve. We'll see you then. Take care.